what I would call a bit of a psychology trade. So let's talk you through it a little bit. This was Monday, and the ECB officials' sources comments. Now, we get various source comments from the ECB. And this comment on Monday was basically a Bloomberg source saying that officials assume QE will end in a short taper. So what the actual source was that QE, once they decide that they're going to end, will have 3 months to taper the purchases down to 0. Now, with the fact that we know that the ECB is winding down their purchases, any change to how they do it is not really such big news. It's not going to be a surprise anymore. We know that they're tapering them, or we know that they're reducing purchases. We also know that they're likely to give us some clue as to how they're going to finish and finally taper them down to 0. So how big a deal is this? Also, once you read into these sources as well, part of it was there is no plan yet as to what they're going to do beyond September. So it was sort of, yes, quite hawkish, but then not that hawkish by the fact that they've not actually got any plan yet. On top of that, we also had other comments from the ECB or ECB members that QE needs to be wound down quicker. QE could come to an abrupt end in September. So this is by no means super hawkish. And now it comes into what happens when you trade this. So we'll talk you through this psychology type trade. You've got the ECB QE or QE taper comments that they could taper it within 3 months, but equally there's no plan. So hawkish, but not quite. Now, positioning plays a big key here. All day we've had a downtrend in the Bund. So this is on the back of what had already finished the end of last week in some kind of some sort of downtrend. Continued it on Monday, and we then moved down right the way down, basically to the lows of the day come these comments just after the close. Areas to watch out for, you've got this little block area here, 88s to 92s. So think about how that means people are positioned. People have been short most of the day. People are likely to stay short. On that basis, how big a comment is this? The fact that the market is already positioned for a comment such as that. So not the biggest deal of a comment, you wouldn't think. So what then happens? In terms of order, the way the comment comes out, you get this line first, that they could end in a short taper. So it seems like they're going to end very quickly. And then you start hearing the rest of the source that it's not had any planning yet. So I'll play this video. What happens very quick, you get the first move down. And the move starts from 74. So keep your eyes on 74. And what then happens? So let's play the video. Why are we not playing? Okay, I'll restart this video for you. Here we go. Right. So here's the first move. You see it skips down very, very quick. So if you saw those sources, there's a good chance you could have sold 72s. Get another little push, looking for a new low. Now, think about what this means. You've now got quite a few people who've sold it below 74. They're now expecting to move lower. Perhaps they're now thinking, I should probably get out of this. The rest of the sources is starting to come through as well. So you've now got people either short or certainly looking to get out of shorts. and others thinking that this isn't such a big deal and having to go out to buy. Very quick, you get the move up to 88s, and this is what I'm talking about with the psychology of people. The fast move was down, then the realization of what it all means pushes the market up. You then get 1,000 chases up, they then buy a little bit higher, hence why we dropped down to 700. And that could well have been someone who really sold that first comment, having to chase the market and pay much, much higher prices. So where did we get to on that move? That first skip up, and this is where understanding your charts as well is very important. As I said, we've got this block between 88s and 92s. So the first skip up takes us up to 92. Sorry, the block's not 92, it's 88 to 99. First skip up to 88, push through to 92, and then we pull back. We actually start dipping right the way back down to 83s here, as you can see. So we pull back to 83s. Now it's all about those 88s. That's this little high here. Once you get a sustained hold above 88s, that's where you can then start thinking about, is this going to start pushing out people who are positioned for a little bit longer? If you've been short all day, this little spike up's not going to worry you up towards 92. But as we start then holding above 88, holding back inside this range here, then that starts getting more and more people out of positions. More and more people are pushed out, and you get, much like we saw in the Bund today, that sweep right the way through range. And so above 88s, as we're sitting there right now, you hold above the 88s, and then we start to push on higher. You can see that market's slowed down somewhat now. It's certainly not moving anywhere near the pace, and that's where, with these comments, the speed of execution and also your speed to understand what other people will have done is very important. Always be thinking about where other people are positioned, what would other people have done there, and how's that going to influence the positions that they've got on and their likelihood to want to get out of those positions.